Trading IQ, where we will learn the unlimited nature of the stock market. This is Shourabh Bhattacharjee, and before I proceed, I'd like to thank each and every one of you for 100 subscribers. I know it's a tiny little number, but it's a milestone for me, and it's a milestone for bigger things to come on this channel at Trading IQ. So if you haven't subscribed yet, I would request you to please subscribe to this channel. In today's video, I'm going to dig in deep and analyze Nifty 50 using the famous Stan Weinstein stage analysis, because right now the market is at a very uncertain stage. You might have been noticing that your portfolio is not going anywhere for the last few months because of the movement in Nifty 50 and the movement in the overall market. So I'm going to analyze this Nifty 50 using Stan Weinstein stage analysis. By the way, if you haven't watched my previous video on stage analysis, I would paste the link on the I button. I have analyzed in detail on where the market was back in last year, mid last year. There was a bullish momentum in the market, and I have analyzed and I have dig deep and shared how you can also use Stan Weinstein stage analysis to perform and determine where the market is and whether it is a good time to buy or not. So based on the current scenario, based on the overall market where it is at right now, first we will determine and see whether it's a good time to buy or invest in any stocks at the moment or not. So let's jump into my screen and see where Nifty 50 is at. So here's the market right now, and as you have noticed in my last few videos wherein I have analyzed Nifty 50 in the past, I use a 30 weeks moving average, and I use the chart in a weekly time frame. So that is what it is right now. The setup is a weekly format, and then I'm using just the 30-week moving average. So the goal is to be using the chart in a very clean way for you to understand the basic concept. Because see, ultimately technical analysis is just that it's a way of speculating and predicting the market, right? There is no guarantee of things will happen. But again, these movements are based on people's activity, right? Whoever is there in the stock market, everyone has different psychology, everyone has different mentality, and it's a combination of all the psychological behavior in the market. So there is a pattern that we can identify from analyzing the technical chart, but there is no guarantee, right? So we would use it for finding information, we would use it for finding momentum, we would use it for finding different indication on whether it's a good time to buy or not, right? So let's see where Nifty 50 is currently at. Now, as I had mentioned, so it's very important for you to watch that other video that I had shared, because it has the in-depth analysis on Nifty 50. Now, the 30-week moving average has bent downwards, right? When it was, I think I had analyzed somewhere around these areas, and it was pretty, the momentum was pretty bullish at that time, and the moving average was roaring upward. Now, from October last year, it saw the peak at 18,500 and around 18,600, and since then it's going downwards, right? It is it formed lower highs and lower lows, as you can see. Let me just find. You see? So this is, let me change the color so you better understand. So this is lower high, this top and this top. This top is lower than this top, and this top is lower than this top. So it is forming lower highs, and whenever there is a lower high, lower lows, and again lower lows, right? So whenever there is a lower high, lower lows formation, that means it's a downtrend. And at the same time, it has crossed over the 30-week moving average and broke past of it very significantly. And during this time, there were so many news, like the inflation, the war that is going on. Inflation is the biggest reason why it is acting the way it is right now, because everything is overvalued. If you ask any normal person, you would know that the market is dealing with inflation. The prices are overvalued in all aspects, in all different areas in life, right? Wherever we have to transact anything, it's overvalued. So this is the reason why it has to come down at some logical point for it to regain its momentum back again. Now it is at a downward stage, and so again, let's analyze where it is right now. Based on the rule, so if we go by the stage analysis rule, you can only buy when the overall market is in stage 2. If it is in stage 1, stage 3 and stage 4, you should avoid buying, you should avoid bulk buying. Of course, if you are eyeing in some stocks for long-term investment, and if those levels are being hit, then you can definitely go ahead and buy those stocks for long-term. I keep an eye on different other stocks, but I have some levels that I've marked on those charts. I will definitely share on my analysis on different stocks that I'm eyeing in and putting in my portfolio based on the level that it hits, right? So that I'll discuss later, but here at this point in time, you cannot actively buy different stocks like you were buying mid last year, because it is in stage 4. You have to be very, very careful, and this is the time you should look to invest in mutual funds. So I will keep another video on this particular topic on how to invest in mutual fund and share my ideas. But at this point in time, if you are to invest in stocks like equity, you have to be very careful, because as you have been noticing that for the last few months, whichever stock you have bought, besides some of the key sectors that are performing very well in this period, which I could say auto sector is performing very, very, very good. And I'm going to share some sector analysis as well after a couple of videos. So for the next few videos, I'm going to discuss on the overall market, the global market and different sectors, and then I'm going to eyeing in some different stock that I'm looking at, and I'm going to use and share my reasons on why am I looking at and how you can utilize that information for your benefit. So again, let's come to the conclusion on this particular analysis on Nifty 50. Based on the formation, since it is forming a downward momentum and it is breaking past of this 30-week moving average, and the 30-week moving average is bent downward, it is in stage 4 based on the rule. And you should look to avoid buying any stocks at the moment. But again, if you're eyeing in for some stocks for long-term investment, means like a couple of years, then definitely you should look to buy at a predetermined level. You should not just compulsively buy any stocks out of will. You should have some level marked. Like when you go to the vegetable market, you definitely negotiate the price with the seller, right? Try to negotiate prices with stock market. Try to predetermine a level which is far below of where you would have bought when the market was bullish. So try to negotiate further with market and use some key levels, key predetermined level, and if it hits that level, then use that to buy and keep it for long term. But otherwise, if you're looking for a short-term investment, I would, of course, suggest you to, don't do it right now, because it's not the right time. But again, I will share some key analysis on different sectors, and some of the sectors are performing very good, like the auto sector. So in my next couple of videos, I'm going to share some sectors. So I hope you like this video on Nifty 50 analysis, and if you do, I would request you to please like this video and subscribe to my channel, and I'm going to see you on my next video. Thank you. Have a great day. Bye.